Hi, everyone. I am so happy to be able to bring to you Joe Rabil. He is a technical analyst with over 30 years of experience, and he and I work together covering some of the biggest institutions in the United States. So, the big money managers, mutual fund companies, including hedge funds. And they used him weekly to review their portfolios, to find out if there was weakness in some of the stock holdings that they had, to see if there were opportunities to buy more shares, and then also, of course, looking for new ideas, idea generations. So that's exactly what we brought to you in this interview, this in-depth interview. And we really started with taking a look at the markets, just given the fact that we saw some major moves this past week, some big swings, and also, of course, a 10% sell-off in tech stocks. So we covered the indices, commodities, currencies, and then got into some stock ideas. So take a listen. I hope you enjoy. And also, so importantly, he has a newsletter, a weekly report that you can get access to. And through a promo code using my name, Catherine, you can get 50% off for, I think, 3 months. So take a look, see if you like it, and sign up if you want. Enjoy. Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. Joe, great to be able to catch up with you and get your views for our viewers. You know I've been wanting you to be on air with me for over a decade, so, and for our viewers to know and how we know each other is, you do technical analysis and have done it for, you'll fill me in on the blanks here in terms of the amount of time, but I think probably 20, 25 years. But we work together in the sense that I would take you in to see institutional investors. So big money managers and hedge funds, you obviously have your own clients, and I brought hopefully more to you. And investors would use you. I mean, these are people who manage 5 billion up to, I don't know, 100 billion, what have you, to monitor their portfolio, make sure that there were no major technical breakdowns, also help them in terms of looking for opportunities in terms of when they might want to leg into a stock, and then also, of course, provide them with idea generation. So you have really been so useful to many, many institutional investors. And now what we're really trying to do, what I've been trying to do, is bring you to the retail and individual investor, because you really just cannot ignore the technicals of the market. And you haven't really been able to for 10 years, but if it's ever so prevalent these days. But why don't you fill in just a little bit about yourself right now before we get started in terms of the technicals of the market these days?
Yeah, I mean, you did a pretty good job there. I've been doing it for 30 years, but essentially I try and help guys that already want to know, they kind of know what stocks they want to own. And I'm sort of helping them with the timing. I do give them idea generation. I give them an idea of kind of the general market outlook. But a lot of what I do is bottom up and sector driven and individual stock driven. And I'm trying to sort of identify the pearls out there that, might be moving to their own, the beat of their own drum rather than necessarily market stocks. I obviously have to follow the stocks like Apple, Microsoft, and all that and give a read on those. But if I can identify stocks that maybe the average person isn't looking at because they don't see them, because they don't have enough time to go through as many stocks as I go through. I mean, literally go through, probably each week, I would say I go through about 2,000 to 3,000 charts, individual stocks. And that gives me a really good feel for the market doing that. And I do it across, from large cap all the way down to micro cap, actually, and look just for different ideas from that standpoint. So that's kind of where I am right now.
Yeah, and also, of course, across geographies and also, of course, currencies as well as commodities. But I also, I think it's important to understand as well, and
the differences in certain technical analysts and perhaps what you use that maybe differentiates you and, quite frankly, your success. I mean, there's no point in looking at technicals if you're wrong. So what do you think it is about your process that drives some of the returns?
Yeah, I would say two things. Number one is I'm willing to get it a little dirty. I go under the hood. And I think a lot of guys are just so busy. A lot of the guys are on TV, or if they're working at a major brokerage firm or something like that, they're being pulled in all different directions. They're on the road a lot, maybe not now, but you know, they're constantly kind of handling what's coming up. And I don't know that they have the amount of time that I do to be able to go through as many stocks as I see. And to me, that's just a massive advantage, massive, because you can look at a group of stocks, say, let's just use an example in energy or something like that, or financials is even better one. And I think if you're looking at what's taking place one by one in each individual stock, and when I go through, I'll typically look at, let's say, 700 or 800 stocks in a nightly review, and it's sorted by sector. So I'm looking at all the banks together, and I'm seeing there's a tendency that all of a sudden, you know, late last year, there was a significant shift in what was taking place there. There was footprints of money showing up, buyers coming in. And when you see that, you typically have a week or two advantage over the guy that's just looking at the like XLF, or he's looking at the market or whatever. So it's just having that little bit of an edge. And then the other thing that I do, I think, is unique, is that I look at multiple time frames, and I look at it I'm looking for trend alignment amongst a monthly chart, a weekly chart, and daily chart, where the timing can be improved and the risk can be reduced. And maybe the point at where you get in a stock might be a little bit more timely. And so that's kind of the goal of what I try and achieve for my clients, and what I'm going to try and achieve as I continue to grow this newsletter business.
Right. And which, for our viewers, I don't even think I said your last name to begin with. It's Joe Rabil. And where people can find your newsletter and reports, it's Rabil Stock Research. So we'll get to
RabilStockResearch.com, right?
Yeah. You know, just before we get going, though, in terms of looking at the technicals of the market, and also a lot of stock ideas for our viewers, you mentioned something which I think is really important in terms of looking at the footprints of money. We should describe exactly in one sentence what technical analysis is, because it does have to do with the footprints of money.
Yeah, I mean, I think there's a lot of different guys. A lot of guys talk about it in relation to like fear and greed, and that shows up in the charts, and I agree with that too. But I'm essentially trying to find where big money is starting to it's like an elephant trying to get into a bathtub. You can't hide. If they start to put their foot in the water, the level of the water is going to go up. So I'm constantly on the lookout. That's really what I'm trying to find when I go through all these stocks. I'm looking for some sign that there's a footprint with big money, because if you can get in front of big money, you can make pretty good gains.
Okay, so that's a lot about just kind of watching stocks move and the various technical factors that tell you those, that give you those signals, versus fundamental analysis, where you're kind of looking at the company, the corporation, the industry. Are people going to spend more in terms of retail sales, and therefore revenue is going to be higher, earnings would be higher, and therefore the stock price is going to be higher? Two very different disciplines.
Right. And let me tell you, I mean, I believe in the fundamental side. I'm not trying to say that, you know, dismiss it. I just think, and I've worked with money managers for 30 years. I can tell you that there are a few exceptions, but for the most part, the top money managers are using both. And that would be my advice to the average guy out there. Learn how to improve your timing a little bit so that you can live through you know, periods where it gets a little tougher. I think it's where, you know, you're trying to still step on the accelerator when maybe you should be, you know, lifting off the gas a little bit. And I think this can help a lot from that standpoint.
Right. And with that said, let's actually get your take in terms of what we've seen over the past 24 hours in terms of the market, because clearly yesterday we saw a significant sell-off as we saw U.S. 10-year yields break through that 1.6% mark. The day looked to be on the weaker side this morning as well. And now we've got a little bit of a reversal. It seems as though people are okay and putting their foot on the accelerator. So let me have you take it away in terms of and let me just make sure I can that we are on shared screen. Yes, we are. So you can bring up the charts. And why don't we just first take a look at the S&P 500 and you tell us what we need to be watching for here.
Okay, so I do have 4 charts up, and I'm going to try and zero in on the one that I think is most important. So hopefully you don't get too confused. But the bottom line is, on the bottom right, I've got a daily chart. And then top right is a weekly, and then top left is a monthly. So obviously the monthly gives us the big picture, wide angle lens. The weekly is the time frame I think that most people should be spending most of their time looking at and looking for trends on that. It tends to give really smooth trends, and it doesn't take as long as the monthly. And then the daily can give us a little bit better timing. So let's just zero in on the weekly chart of the S&P. And, we've made a pretty good run, obviously, from the bottom in last year, made a big move up and then kind of consolidated. Now we've made another run up. And just recently, we're seeing MACD. This is this blue line, and the golden line is kind of like its signal line, or a moving average of the blue line, is starting to show a little sign that maybe the momentum is slowing a little bit. I also look at ADX, and that's also showing a little bit of a turn down in the strength of the move right now, but not to the degree where I'm necessarily looking for anything significant to the downside. So when we do this, we kind of just want to look at where price support comes in. And, we've definitely got some support here at 3,700. That's where we're basically bottoming right now, is a little bit above. So I think this 3,700 is the key level to watch right now. If we break that, then I think we start to get into something a little bit deeper that probably takes more time, could end up taking a few months potentially, and that's for the S&P. I mean, we're going to go through a lot of the indexes, but in terms of the S&P, I think 3,700 is kind of a key level right now.
Okay, and just real brief, because we're going to talk, I know you're going to talk a lot about MACD as well as ADX. Tell us how that factors into your view that 3,700 is a support level.
Well, I use the momentum. So these are both momentum indicators, and they measure the strength of each leg. And so we're starting to get a little bit of a sign that the momentum is starting to slow a little bit. Now, it's not the type of reversal that would suggest to me that we're getting ready to plunge or anything, but it's something that we need to be on the lookout for as we start to find support here and maybe push higher again and potentially test this high. We kind of want to watch and see if this indicator improves with it or if it keeps dropping. And then the same thing holds true for the ADX line. And so that's really how I would be I think that's how I'd be looking at it, and that's how I use these indicators. And then I do it in 3 different time frames. So right. It can be pretty valuable and help you really pinpoint where support and resistance is. But right now, I think I'd be focused on that 3,700 for the S&P anyway.
Okay, so at these levels, you're not too concerned then?
Not really. I mean, we've turned down like a short-term trend, but we haven't really turned down the weekly chart, which again is very important. So just to take one more quick peek, and then we won't have to go through this on all the stocks, but this is an 18-week moving average, and this is a 40-week moving average. And I use an 18 simple moving average and a 40 on every single chart. So if any one of these charts I pull up, they're all going to look the same, even though one's a weekly, one's a daily, one's a monthly. So just trying to identify what the trend is. The 18-week moving average is a very powerful line. You can see every time we've pulled back to it, it has acted as support, and it's doing it again right now. So that's why if we break that, it would be somewhat of a concern for me.
Okay. All right. Let's take another look then at a look at the Nasdaq. That is, of course, there's been a lot of weakness over the past couple of days and concern. And here we are now up on the day to the tune of 1%, Joe. So what's going on there?
So first, let's just look at this on a monthly chart, because I want to just point out we've made a big run to the upside and we've gotten pretty far away from this 18-month moving average. So one of the things I like about doing this multiple timeframes is that
Wait, sorry, 18-month or 18-week?
No, this is the monthly chart.
Oh, okay. Okay.
Yeah. So I'm pulling up each one. I'm going to try and keep you on tune, but this is the monthly. So this is a long-term look, and it's made a big run, and it's I think gotten ahead of itself. After, when you get far away from any moving average, especially the 18-week, it tends to act as a leash and maybe like pull it back a little bit. So that seems like that's what should take place here. What's possible is that it just ends up consolidating sideways and lets the moving average catch up. But I still think there's some pullback risk in this. So, if we go and look at what took place on a weekly, just in the last 3 weeks, we've made a pretty good dip. I think we've corrected about 10%. It's the type of thing where, this is probably going to be a process as opposed to this just dropping straight down instantly. We're just going to have to watch and see how this reacts at these key levels. So right now you're kind of right at the 18-week. It's a little bit below, but the way it's rallying, it might close right at it for the week. So just something to keep an eye on as we go forward.
What is the level then for the 18-week? Because we're going to be watching the close pretty closely today.
18-week. Oh, I'm sorry. Wrong chart.
For the NASDAQ, yeah. If it closes right at the 18-week.
It's at, it's right about, right here, 12.872, something like that.
Okay. We'll watch that. Let's also take a look at the Dow. The Dow obviously has fared a little bit better versus some of the others in the market just because it's got a little bit more cyclical, value-oriented tilt to it. What is that looking like? And then also, too, Joe, it's been interesting is that it's been such a laggard in the broader market, but now with the reopening trades and cyclical focus, it seems to be showing a little bit more strength. What do you see on a technical basis?
Yeah, it really goes back to your original statement, which is it's a flip from growth to value, and that's helping this index, but it's been really hurting the index for quite some time. And so I think what we're seeing looks pretty real. I actually track, I don't have the chart, unfortunately, right now, but I track the IWF, the growth fund, versus the IWD value in the Russell. And it's made a pretty big reversal. It's hard to ignore what's taken place there. It looks like something that, is probably going to last for a little bit. I don't know that it's going to last the same direction that, I'm not saying we're at 2000 and it's going to go on for 7 years like it did the last time, but I think it's something that you have to pay attention to. And again, if I go through stock by stock, there's a lot of attractive patterns in what would be considered the value area. So we're going to talk about more about that as we go along. One thing I do want to mention, that we did have a question about, two questions. One related to how the environment has changed a little bit, just based on the fact that the volatility has increased, and we got the GameStop type of action taking place, and how does that affect the technicals? And then there's a second question related to, we've been in basically a 39-year bull market. I'm going to show what that looks like. So this is the Dow Jones Industrial Average using a yearly bar chart. Instead of a monthly, I've got yearly bars. And so it started up in 1982. So that was kind of the question. It's 39 years of just really been trending to the upside. But if you notice on a yearly chart, we've gotten pretty far away, right? I mean, this is the 18-year moving average. Wow. And the last time we pulled back to it, look at how that came down and tried to close below it. And by the end of the year, turned around and then took off again. So those are really great opportunities. Right now, we're in a higher risk territory. We've made a pretty big run away from this line. So it's not to say that it's an instantaneous thing when we're looking at a yearly chart. It's just to know that where you are in the bigger picture, there is more risk right now. And so we want to see signs. If we started to see signs that the monthly chart was losing momentum or some type of reversal was taking place, then I think that increases the risk that maybe we want to go through one of these phases. But I'm not big on making a big market call. It's not worth it to me, but I want you to know where you are in relation to like your risk levels. And I would consider this a high risk level. And it gets worse as you look at the S&P and the NASDAQ.
Okay, and to be clear too, it's not worth you making a big market call because you really are so bottoms up and looking for the stock specific opportunities, not just buying the market as a whole and selling it when it maybe looks a bit overstretched.
Exactly. So, I mean, what I'm trying to do is find the pockets that are working. So if the market decides to reverse, there could be some other areas that are they have no correlation to the market at all, that can be really powerful trades, as opposed to saying, just go to cash. So, obviously my clients have to be invested. They've got charters that tell them they basically, they might hold 90%, 10% cash at times, but it's very rare for them to ever go beyond that. And even having 10% cash is a big risk for them. So they're constantly on the lookout for what is the best stock. And so that's kind of how I grew up in the business. And that's really what I try and focus my time on.
Okay, let's
just to finish this point, because this is stretched away, it is a slightly different environment. I mean, we are in a period where, we're starting to see the GameStop type of stuff take place. I mean, it probably wouldn't happen early on in a bull market, but these are the types of characteristics when you get really late. I think you should plan on volatility continuing to increase. I think when we get this type of elevated price action, that you're going to see bigger swings, kind of crazy price action, probably from here on out until we actually make some type of a bull market top, which I think it's kind of hard to say, because I got to tell you, the pullback we're getting today is just symptomatic of the fact that people just seem like there's still a lot of cash on the sidelines. It's the only way I can reconcile how every single time it pulls back, the market seems to show strength again. So, I think you're better off not making a monster call or a major cycle call or anything like that, and start just looking at, the trends based on the weekly and the monthly, and go from there.
And your own individual stocks, which we've got a lot to go through today.
Yeah,
that's for sure. But we want to kind of rip through the broader markets, just because that's what a lot of people see when they watch television or they're watching on their iPad or what have you. So let's quick look here at the R2K, the Russell 2000, representing the small cap stocks. It's important because, they represent 2,000 small cap companies in the United States. So when you see this move higher on a fundamental basis, it's kind of telling you that people are feeling better about the U.S. economy. So, that's one reason why we look at whether or not you're invested or not. But what's it telling us right now?
So one chart I just want to spend a minute on, this Russell 2000. It's a weekly chart, but I've got on the bottom, I've actually got a relative strength line. So this gray line is the Russell divided by the S&P, or kind of like versus the S&P, so as a ratio. And so you can see it was getting killed from 2018 all the way down till late last year. And then when this turned, to me, that was just a major, very, very important factor. And I was seeing thousands, and not thousands, but when you look at the Russell 2000, there were a significant number of stocks showing improvement in late 2020. And we've seen the benefit of that. Now we've made such a big move. I think we should spend some time correcting. And the only point I wanted to make is that when the Russell is leading, which I would consider it leading right now, it will lead on the pullbacks too. It's a more volatile index. So when we get dips, it will underperform a little bit. But I would expect this to resolve itself to the upside after this consolidation, and this line go to another new high. I think we're looking at something pretty meaningful from what I can see, especially based on a lot of individual stocks.
So Joe, we're at 2166. Is there a level that you think we could get in at? Is it here? Do we wait? What do we do?
I would probably be thinking around 2000 would be ideal if we're going to buy on a dip or something like that. But, I think we're going through like a contraction phase, meaning we spend a little time consolidating the gains after the big run. So it might just be more of a time correction rather than a price drop. And so if we just hang here for 2 to 4 weeks and we don't pull back, then I'm not going to sit down here at 2000 and you know what I mean? So I would be willing to step up, but I want to give it a little time at least to see if it wants to drop back down towards the 18-week.
Understood. Let's take a look at the TSX. It's such a different indice versus those US ones, just in terms of the composition. Obviously, energy and
The
materials.
TSX, it's 18,000 is the key level. I mean, it's a very, very key pivotal level. Above that, north of that, you got to feel pretty good about it. If it had a bad week where it came down and sliced down through 18 and closed poorly for the week, that would concern me that maybe we're going back inside this range and we don't really have any upside momentum. So because the ADX pattern here is still pretty low. It's only in the teens, whereas on the other indexes, it's a lot stronger, the ones we've talked about. So it's not quite as good from a momentum standpoint, but anything north of 18 gives it the opportunity to start to see improved momentum. So I wouldn't just throw in the towel on it, but I also wouldn't go crazy being a buyer quite yet. I'd like to see a little bit more confirmation, at least see this hold 18,000 a little bit longer.
Okay, let's take a quick look here at the triple Qs as well. So tech heavy as we look at the triple Qs.
Yeah, so this is really not that different than the NASDAQ index, right? The bigger index is very similar. It got stretched away on the monthly chart, kind of correcting in. Many of the same characteristics were kind of coming in pretty hard. We're right about the 18-week average, pretty close to it, but there's some support here at 300. I don't like the volume action, and it's really easy to see on the daily chart. Look at this sell-off. Look at the expansion and selling volume. And so we want to kind of be on the lookout as this rallies off 300. Does the volume dry up or does it improve? And we see really good buying action take place and good volume associated with it. If so, then 300 is probably pretty good support. But again, I'm not really of the opinion that I'd want to dive in here and buy simply because it's starting to find support. I want to see some signs of improvement. The ADX is actually pretty bearish on a daily chart. So
how so? Can you explain that for 1 second? Oh, the ADXs.
Yeah, the ADX is this blue line, and it's moving up and crossing above 25 for the first time in several months. And it's based on the red. The red is telling you the strength of the sellers. The green is showing you the strength of the buyers. So if red breaks out like that, it's showing pretty good selling strength, and it even pulled back and held for the first time above this 25 line, and now we're getting again this blue line rising and moving up above 25 for the first time in several months. So it's real selling. It doesn't necessarily mean there's a huge amount of downside, but I would be surprised if we just turn on a dime and go straight back up again.
Okay, so Joe, we've covered the indices. I do want to hit the commodities and currencies for our viewers as well, and then we'll get to the stock ideas. There's just so many, but this is important because if we're looking at some of the commodities, obviously that dovetails right into the sectors and the stocks. So first up, let's take a look at gold.
Yeah, so I do like having the two charts up because you can see on the left we made this huge move over the course of a few years and got really extended, got up kind of just beyond the old highs in the gold futures, and then made a top right around this big round number at 2000. And it's spent a long time working its way back down towards the 18-month moving average. So in reality, this is doing exactly what you'd expect it to do. It made a big move to the upside, and it's just got so extended away from the 18-month that it needed to kind of work off that overbought condition. So I think that's what's happening here. The momentum conditions are still okay. On a daily chart, in a weekly chart, we've kind of worked our way down, and now we're looking for a sign. I would almost be doing this. I would just be saying, if we get a sign of a break of the, whoops, hold on, put this downtrend in place. If we break the downtrend line to the upside, then you have to assume we're getting ready for another decent sized leg to the upside in gold. Below this line, it's probably just kind of trading action. But once this line is broken, it's going to be pretty meaningful, I think. So we're getting pretty oversold in the short term. I wouldn't be surprised if we're due some type of a rally right now or soon.
And so it looks as though it's 1860 is the level that you want to take a look at in terms of if we kind of go back to that and break through it, that you could get another up leg.
Right. But just realize something. This trend line is going to keep. So every bar that goes by, the price is going to drop. So it's every time you go sideways, even go sideways, you don't have to go down. This line is going to keep dropping. So where it breaks through might be like 1800. So it's just a good thing to put down there and keep an eye on going forward.
Okay. Let's take a look at WTI oil. An incredible, I would think, powerful move. What does it look like technically?
Yeah, I mean, it's made a pretty phenomenal move. I'll just focus in on the weekly chart here. So, because this is specific pattern I refer to as a undercut and rally, basically, and it's doing it on a really long-term chart. So we essentially came down here and undercut this support zone back from 2015. And if you notice, even though it had this wild drop and all that, it wasn't down there for very long before it reversed back up and got back above this level. And so I refer to that as, I didn't coin the phrase, but I do like it. It's an undercut, and then it immediately rallies and get back above a key zone. And so it kind of, it creates this potential turnaround pattern where I always look for the first pullback after the spike. You get a spike up and then it comes back, and it usually pull back. And so somewhere around this 40 level, it was sort of giving off signs that this is ready for another push to the upside. And we made it through this resistance. The next resistance is probably, I thought actually we're right in this area, 65, 66, but the momentum is so good. It's very possible we're going to work our way up into the mid 70s.
Mid 70s for WTI, potentially.
Yeah, I'm using the crude light futures.
Okay.
I think that's the same, but I'm not positive. Just
okay. 66 those where we currently stand.
Yeah,
that looks about right. Yeah. Okay. Let's take a quick look here then as well at the U.S. 10-year yield. This, of course, is what's been driving the market to the downside. But today it seems though now we've got a little bit of a reprieve, ever so slightly, minute by minute.
I mean, this is really what's been helping financials, right? I mean, so this got way overdone to the downside. So this is a monthly chart. We had this big breakdown right around 1.5 with the yields, and they dropped down and got down to such a ridiculous level. And then we started to see a turn in the MACD line, from a really far distance away from the zero line. So this is kind of like, the zero line is kind of like a neutral level. And if we go back and look at this, historically speaking, when you get this far away, you can almost consider this like an oversold level, right? I mean, every time you get down here, you get some kind of a rally. And I think that's what we're in the midst of right now. So we've got up to this 1.5 area. It'll be pretty important to see how it reacts here, because if it makes it through, then you got to start thinking 175 or maybe 2.
Okay, well, this is really important. I just had a conversation with Barry Allen, who you haven't met yet. He's a veteran fixed income money manager. And, when we're thinking about that U.S. 10-year yield and perhaps what starts to kind of put some more stress in the markets for a significant correction, it's probably about that 1.82% level. So can you just give a little bit more detail in terms of what you're going to be watching and what kind of momentum or confirmation you're seeing?
So, I have a price target up around 175. We'll have to see how it reacts there, but that's kind of, so in other words, if we don't start turning down pretty quick, meaning, sometime next week or something like, and get kind of back below this 150 area where at least we start to kind of consolidate the gains, then I think you have to start thinking 175. That would kind of be my next kind of minimum target. But if we get up there and you start looking at the levels, it kind of makes sense to me that we could end up reaching the 2.0. I don't know. I mean, the momentum is so strong, and I'll just look at this on a daily chart. Look at the we were talking about the ADX. Look at how strong the ADX is. So it's almost overheated. It's so strong. And it would make sense for this to pull back a little bit, but I mean, we're in what I would consider to be a power trend for this, and it does deserve a pullback at some point here. But I don't know. I don't know that I'd be looking for this massive big drop to the downside. Okay.
And Joe, what's interesting though too, when we take a look at the U.S. 10-year yield, because that's what you're looking at, right?
Yeah.
And the converse of that obviously is the pressure to the downside that you're seeing on treasury bonds.
Yeah.
But you can do the technical analysis on the actual yield move.
I do it on the yields.
Okay.
I do it on the yields and not the bonds, but
Okay.
that tends to be, no, just because I've gotten the questions over the years and everyone wants to talk about the yield. My clients want to talk about the yield. So I've just kind of focused on that.
Yeah, no, it makes sense. That is what we're talking about. So that's helpful. But I just wanted to clarify that because it is interesting to think that you could do the technical analysis on the yield curve essentially, or the yield.
Yeah, believe it or not, actually they went to chart school. I mean, they follow the technicals pretty well.
Wow. Okay. Let's take a look here at the Canadian dollar.
Yeah, so if we look at this on a bigger, longer term time frame, we can see, a big drop into the bottom in 2016, and it has been kind of working sideways. And now all of a sudden, it almost looks like it's trying to turn the corner from a big picture standpoint. It hasn't done it officially, but certain signs, just climax low and then another climax low. We got a pretty big double bottom. I mean, I'd like to see a little bit more strength through this 0.8. But I think there's signs of improvement here. It's still a little early. There's not great momentum in place yet, but it is showing signs of improvement. If we just go and look at the dollar index, the US dollar index itself, we've made a pretty good drop, right? And we've come down to this support area that I was basically pointing out to clients was 89.90 was where the target was for this drop. So once this broke, mid 90s, I was looking at this area and we've reached that now. Now we're getting a bit of a bounce. I don't know that it's a reversal in trend, but it's probably like a minor reprieve for now. And then we're going to have to look for the next time it sort of gets going again to the downside. We'll just have to see. So right now, the momentum is improving. There's short-term improvement on the positive side for the US dollar index.
Okay. Let's also take a look here at Bitcoin.
Yeah, so this has gotten a little crazy, but I don't view this the same as I did when this peaked back in 20. So it's funny because this is the futures contract. It started trading at the peak here, or if you look at it on a weekly chart, this was the peak. It was the week it started trading on the futures contract was the end of the move. I don't know. I personally think while this is due for some type of a correction or a pullback, or maybe go through a longer digestion phase, I'm sort of the opinion based on the momentum characteristics and everything that this has probably got more to go down the road.
To the upside.
Yeah. I just think it scares me a little bit based on the run that it's had, and again, it's sort of stretched away. So we're showing a little bit of sign of momentum divergence, just a little bit, enough to for a stock that or a markets that's so volatile. I think you got to be really careful. And let's just take a quick look at so Grayscale Bitcoin is the trust that trades like a stock on the market. Mm-hmm. It's doing sort of the same thing. This last run to the upside has lost a little bit of momentum. I would not be surprised to see this come back down into the low 30s or something like that. But again, I'm not necessarily looking for some kind of a big reversal. So
okay, but the ADX looks very strong for both of these, doesn't it?
Yeah, they're strong. They're overbought but strong.
Okay.
So yeah, I would tend to believe when we get a strong signal like this, we could go through a correction, but odds favor another move after that correction.
Okay. Full disclosure, I do own Bitcoin, so I'm glad to hear. I do not own yet Ethereum. Let's take a look at that.
Yeah, I mean, I think this has come in too hard. I made a nice move to the upside, but look at how different the decline phase has been. It's a lot easier to see on a daily chart. I mean, pretty violent. It's a thinner market, but a little too violent in my view. You don't have... So you don't even have ADX yet because you don't have enough time to create it.
Because it just started trading.
Yeah, it hasn't been around long enough. So I don't hate it. I'm just saying, and when I compare it to these other Bitcoin markets, I don't think it's quite as strong. It's probably because it's thinner, but I think it's going to need to stabilize a little bit, just based on the way it dropped off.
Okay. Joe, let's turn our attention now to stocks. And, we've got we're going to do this kind of in three parts. There's some stocks that I know so many Canadians having, been on air and knowing what people want to hear about that we're going to go through first. Then we're going to go through viewer questions, and then we're going to get to your top stock ideas as you screen, as you say, thousands of stocks. So let's just start with some Canadian stocks that Canadians care about, and take a look at the banks. Let's run through like TD, BMO, Royal, as well as BNS, just to start.
I'm just going to pull up a weekly and leave it there. I like the action here. Good, strong move, good momentum characteristics. Both MACD and ADX are confirming this move, but you've made a big run, kind of like what we talked about with the Russell 2000. You make a big run, and it ought to take some kind of a breather here, especially because we went from a new low down here to a new high. And when I see that, you tend to go through some type of a breather, but I don't view it as being negative. I just think, it would be good to digest this fast and rapid up move of 50% in a short period of time. And really, when I go through and look at a few of these others, Bank of Montreal, similar situation, momentum confirmation, good, but we've just made a kind of a big run. I don't have a problem doing a little buying because we are making a new all-time high, but I would give these a little room because I think you could easily spend some time consolidating in here. And I would try and look advantage of maybe playing pullbacks in these if they take place. So, and then we can go, I'm just going to run through these Catherine, real quick. Royal Bank of Canada. This has a really nice breakout. And if you notice, when it broke out above these highs, it actually kind of checked back and got underneath them. And now it's kind of making another new run. The momentum characteristics here are not quite as good, but overall pattern, I think, is okay. And I think there's a lot of support in the mid to low 80s.
Okay. Yep.
Nova Scotia. This has a really strong pattern. Again, we can see the ADX line hitting new highs at 40 and MACD confirming the move. So I like to see when price hits a new high, I want to see the momentum hitting a new high with it to confirm the trend. We have that taking place here. We also have this kind of a breakaway to the downside and then quick reversal. And so when I see that, I kind of think there's underlying support from that. But again, a little bit overbought in the short term. And then NA, National Bank of Canada, really interesting because this turned and rallied up and got up against the old highs pretty quick. And then we just recently broke out with some really good strength. And the ADX is crossing above 25. I like the action here. I really do. I think this looks pretty interesting. It's just short term. It's a little bit ahead of itself.
So, Joe, it sounds as though for right now, when you take a look at all those Canadian banks, that the momentum, the price action, it's all confirming that, yes, you can continue to own it. The difficulty, though, of course, for those who might want to buy some shares now, you might have to just wait a little bit. It sounds like for, a few dollars in a pullback. And it sounds like you would expect to almost see that just given how far they've kind of stretched out.
I think so. And we've covered the Canadian guys, but it's really pretty much similar when I go through the U.S. banks as well. They've made a big run. The healthy thing to do. Now, obviously, we're in an environment where prices don't always do the healthy thing, meaning, they might just keep going. But if they do keep going, then to me, that's borrowing away from how long the trend could go. And I think if you pause here and they take a breather and consolidate and digest the gains, they set up for another really powerful move to the upside. So, I would be a holder right now and looking for opportunities on pullback to be a buyer.
Okay, let's run through just a few Canadian energy names as well. CNQ, of course, is a name that a lot of people and money managers here in Canada own. How's that one looking?
Pretty good. So here's that undercut and rally pattern. So, just to give you an idea, like down in here, I do have a channel for technical. I Invest Like a Pro is my YouTube channel, and I teach how to incorporate technical analysis into your investing. So these are the types of things I show where I'm trying to explain this, an undercut and rally, and I'll go in detail exactly what the characteristics are and what I'm looking for. But in this case, you had the spike low, rally up, and then you consolidate. And then as this started to come up through 20, you had to start taking this very seriously. And so now we're up into the next level of resistance around 32. I don't know. I mean, to me, again, it's probably a stock based on the action. I do like the improvement. I would probably, if I were buying it down in here, I'd probably be maybe reducing some profit, taking some profits, at least partial, and then seeing how it reacts at resistance here.
Okay, let's look at Suncor as well. Another big large cap.
This one's a little bit different. It's not as far along in the process. The volume is improving here, but it's got more resistance on this way up. So I kind of still view this more like a trading play. Whereas CNQ has done a lot of work in terms of turning around the bigger picture pattern. This is, to me, I think, maybe it works up into the mid 20s, and then it's going to hit a whole nother level of resistance. It's going to be a little tougher to get through.
So it's a trading play, but does it still work at these levels at 21?
Probably, but I'm kind of a believer in understanding my risk levels, right? So if I buy it here, I've got to risk about 5 points because that's the last bottom to make about 5 points. So it's kind of like 1 to 1. I'd rather buy something and have like 3, 4, 5 to 1 in my favor in that way. But it's not to say that it can't keep pushing higher. So again, I would probably hold this if I were in it, but I would be getting a little leery as this approaches the mid 20s.
Got it. Okay, let's take a look here at that Pipestone.
Pipe has made a monster move again. So I'm looking at these base breakouts down here at 80 cents. Look at where the ADX was just kicking above 25. We were getting the trend going to the upside. Look at where the MACD was crossing the zero line. This is the area where you really want to step in on these type of names that are showing new momentum. Now we've gotten the benefit of that, and it's more than doubled, right? And now we're up into this resistance zone. So I like the momentum characteristics. I'm not saying we're going to go all the way back down, but I do think this is a time where I'd probably be more inclined to kind of maybe trim it, reduce it, and then look for pullbacks for another buying opportunity, because we're very far away from the 18-week moving average right now.
Very far. And interestingly, I had who you haven't met yet, but you'll meet him, I hope. Rabil Tamazian is a senior energy analyst here in Canada, and this was an idea he gave us about a week ago. When I interviewed him, I actually ended up buying it. I think it's only been a week or so, and so I've obviously benefited. Not I didn't double my money, but I am looking for the possibility to buy in again, Joe. So you're thinking maybe more in that 140 level?
Again, it could be a price pullback, or it could be a pause. So it could just be going sideways and letting the moving averages catch up, and that'll work off the overbought condition as well. So I'm not necessarily, when I say pullback, it doesn't always mean price is going to come way crashing back down. It could just take a breather and digest the gains. And so that could take place here. The power behind this move is really good. The volume, I'm not even showing the volume, but look at the recent green bars coming into this. So really good sign. I like the overall pattern. I just don't like it in the short term. I think there's a little bit of pullback risk.
Okay. What about HWX?
So this one, I actually want to switch to a monthly because I want to show you what is really going on here. So look at what happened. This was going through this long decline starting in 2009, big decline. All of a sudden it finally hit support in 2012, got a rally, and they came back down in 2015, found support, has been doing nothing for years, nothing. And then look at where the volume started to pop, right? I mean, it was early. It was still about $1 where the volume starts to show up. And just to let you know, these micro cap names, the small micro cap names, it's best to look at price and volume. It's not to say that the indicators won't help, but price and volume is really key for micro cap. And we got the big move and then the pause, and now we've made a big run. So again, we're short-term overdone. We've made a little bit of a rally, but in the bigger picture, I think there's more to go here.
Okay, what about TCW? These are all Rabil Tamazian names, just FYI. TCW, yeah.
Yeah, so this is kind of doing the same thing, big turnaround, everything. It just doesn't have, although the ADX is showing good momentum characteristics, I don't really see the same type of strength that we have in some of the other names. That doesn't mean that it's not going to work or whatever, but the dynamics are not quite as good. I know that this is showing 57 on the ADX, and that's a big number, but again, sometimes they get the ADX gets a little skewed with small cap names just because of the way they trade. And so you got to be careful on that, but big double bottom. I mean, I like what's going on here. I'd like to see a little bit more strength in the rallies, but bigger picture turnaround just probably needs a pullback more than anything.
And when you say strength in the rallies, what do you mean? Do you mean volume? What do you mean?
Volume's finally starting to pick up here, but yeah, I'd like to see a more of a vertical move on the up moves.
Yeah.
And then, if you have a pullback that's more gentle, right? A little bit more, not as deep, and then have, again, more like, so it's the velocity of the trend has a lot to do with it. And sometimes ADX gets fooled sometimes. So I don't really, this to me looks like something that's kind of been creeping higher. I know it's a pretty big percentage move, but when you look at it compared to these other stocks, it's not the same kind of dynamics behind it. So,
okay. Before we get to the questions, I'm going to throw one into you, Joe, but I think you'll be able to find it. Real Matters, REAL, it does trade on Toronto. It should come up. Yeah, second one. Yep.
Okay. Yeah. So this has been a pretty rough decline. I'll look at this on a monthly just so you can see what happened. So here's where it opened, originally started trading, and then had a big drop, and then turned around, made a huge run, and now we're back to where it started trading. So, something like this, I would probably want to look at a fib retracement here and say, we
describe what that
back
means.
More than 50% of this up move. So it's lost a little upside momentum because you've dropped down more than 50% of this up leg. So normally, if you can hold the 61%, then that's a very good sign that you're holding the bigger trend. But so that's kind of a key level to watch, 14 and a half, but really like to see a bounce here and maybe trade between the 618 and the 382 in the near term. But we've got to kind of key on this. If it keeps dropping and drops below 14, something like that, I think that would be a pretty big negative.
Okay. It's kind of an interesting Canadian, it's real estate, but it gets lumped in with tech, and it has all US exposure. But it gets thrown around with the NASDAQ. Okay. So, Joe, let's take a look at some of the questions from various viewers, and hoping, let's see here. Well, here's one question. It's from Jackie. And you kind of started out talking a little bit about this, but how has the pandemic affected Joe's analysis of companies and stocks? People are hypersensitive and reacting more irrationally. You have youth investors with time on their hands disrupting GameStop. Has it changed for you, Joe?
Well, that's what I was saying earlier when I had the Dow chart on the yearly, that it's gotten stretched away, and we've had such a long run. And those are the types of characteristics that we tend to see in an environment that's been running for a while, right? You start to, because a lot of people miss the bull market, right? I mean, they really didn't participate. Now we're starting to see a lot more activity. It doesn't bode well in the bigger picture, I think, but it could go on for another year. I mean, we don't know the timing of that. So that to me follows like a sentiment thing. It's something I would follow from a sentiment standpoint, as opposed to the price action and everything. We're seeing very concentrated stocks like GME, the handful, 10 or 12 that got played, and a few others. And we actually have a few that we're going to go through. But in terms of having an effect on how I view technical analysis, I would say no. I think you have to understand what a blow-off looks like. And we saw some of those take place. I mean, that GME was a blow-off move, not really sustainable. And in a way, this Real Matters is kind of like that, but just not to the same degree. It wasn't as vertical, but the same kind of action where you just keep going and going and going, right? It's just, the fact is that GME did it in such a short period of time.
Right. A couple days. Okay. Joe, let's take another question here. Curious on what Joe thinks about ABST, KXS, Lightspeed, NVIE. There's a few to go through. So let's start with ABST.
So this actually looks like it got into that little spiky action with a lot of this other stuff. I don't know if it had anything to do with that, if there was some short exposure in this or something like that. It looks like it was around the time of the earnings. And the problem I have with it is if you look at what happened, it had a big gap up, and people took profits on that and sold it off. So I think we've created some resistance up there between, say, 15 and 20. It's resistance for me is more of an area. I think in the high teens, it's just a problem area, but I don't think that changes anything that's going on in the bigger picture. It was a huge breakout in the 8, 9, 10 area. I just think it got a little ahead of itself. Let me pull up KXS. This is a really violent break on its earnings. The breakout of below 160, I think, is a pretty big negative. We're coming into support around 120, but I would not be a buyer of support because you've broken the trend. And so I kind of look at this as kind of like being guilty until proven innocent. I want to see signs that buyers are stepping in. The momentum is pretty negative to the downside.
Okay. Light speed? Yeah.
A little bit of got ahead of itself. It made a really nice move. Good overall characteristics in place, but violent pullback. And when I see this kind of violent pullback with pretty heavy volume, I tend to believe it's going to take at least a couple months. I mean, normally these corrections and trends take anywhere from 2 months to 6 months to play out. And so it has been sharp, and I'm not saying it's going to keep dropping for that amount of time, but it might end up finding support at 50 and then just kind of going sideways for several months.
Okay. NVEI, another one to take a look at.
Yeah, there's not a lot of history here. What I have, and let's just look at a daily chart. So it had been going sideways, and then you kind of broke this area. But here's one thing I wanted to point out on this. We're at an incredibly pivotal area around 60. So this was where resistance was, and then you broke out at 60, and then you came down and found support there. It didn't quite make it this time, but now we're back here again. So it's sort of like the difference between being positive and negative. I think if you break down below this on a weekly closing basis or something like that, then you have to kind of think you're below, I think, pretty critical resistance level. So something to keep an eye on.
So then what would be the next resistance level? Like in terms of, what I'm sensing too, Joe, is that this person probably owns all of these stocks. They haven't been performing as well lately. And, some people trade them, some people don't. Some people want to know what their downside is.
Yeah. So if 60 doesn't hold, then I think you got to start thinking about probably around 50, around 50. But the reason why 60 is so important to me is that it would change the whole pattern for me. Like this right now is okay because you're surviving 60. And that to me would mean, okay, this is just an up move and then a correction. And then we could keep climbing higher. I think if we break 60, then we're in for a much longer period. If we get down to 50, then you're probably not going to get through 60 for quite a while.
Okay. Got it. Let's take a look at the last one. I don't know if you found this LQDA on the NASDAQ. Oh, you did.
Yeah. It had the drop and it went sideways and then it tried to emerge, but look at where the volume really didn't follow. As this was rallying up here, you notice how the volume wasn't very good. So that's where sometimes ADX can fool you, but on a small cap stock, micro cap stock, always pay attention to the volume. You want to see good volume on the rallies. And now we're actually seeing heavy volume on the decline and it's back below its moving averages. So I kind of view this more like a waste of time. I don't know that there's a huge amount of downside necessarily because there is still support back here, but it's lost its upside momentum. And not that it really got going anyway. So I'd kind of like to see it get back up through 3 with some volume and then maybe get a little bit more interested again.
Okay. Let's take some questions from Sarah. She's looking at Uniselect on Toronto, Palantir, and Nokia.
I'm going to go and basically just look at a weekly chart just so you guys know that's really what I'm trying to focus on because I think these are the kind of the most important trends in what we're seeing. We are breaking a long-term downtrend line in this stock. So so in order to change the trend, you break the trend line. That's 1, right? 2 is you come down and test support in some way, shape, or form. And then 3 is coming back above the rally high, which would be this, whatever this peak ends up being. So you have the makings of a change in trend. It's still a little early. And we can see resistance here still probably about 10 up to 12. That's probably going to be a little bit of a problem until we get to the point where we test support and hold and then turn back up and break through this line. Then you have a stage 2 uptrend in place and you have real potential. But I do like what's taking place here. There is a lot of improvement.
Yeah, and the ADX is favorable too, right?
Yeah, it's still, so I kind of like, it's quiet. It's not, there's not a lot of selling anymore. You had the selling back in here, and then, now it's sort of stabilized. So green, the buyers are starting to show up a little bit, but we need them strong enough to get this blue line over 25, and that sort of confirms the trend. So it's just going to take a little bit of time, but there is improvement.
Interesting. Thanks, Sarah. I might look at that. So, nice to point that out. Let's take a look at Palantir.
This is a little different. Again, not a lot of history, big up move, and then we've had a sort of a violent decline. The volume is a little heavy. I was sort of keying, I've gotten a lot of questions on this. I know this is probably a pretty good company. Not that I know what's going on, but I get pretty interested prospects in this. So I think we're coming down to kind of this key level is around 22, 23. How it reacts around here is pretty important. Based on the volume, I don't think you have to dive in. I think we'll have some opportunity to watch this sort of maybe work back and forth a little bit. If you like to buy on weakness, like you like to really buy when it's down, then nibble at it a little bit, but don't go full force. If you buy a position, buy maybe a third or a quarter to start. We're in the area where we start to see buyers stepping in or support. And so I don't have a problem doing that. I just want to make sure you understand we don't have any sign that it's really turning around quite yet.
Okay. Let's take a look at the next one, which was Nokia.
Yeah. So this is this got wrapped up in this the GameStop play, right? I mean, you had this big spike up in reversal. I'm pretty sure this is right. And so I'm not exactly sure what took place there, but it's troubling to see that kind of a spike in reversal. While it's not like real investors up there with a lot of resistance, it's still a problem. And it sort of tells me 5 is the number. I mean, we want to get back through 5. And if we can do that, then again, we have this pattern where you break the downtrend and then you test support and then you turn back up through 5. Now we're starting to see signs that maybe the trend is shifting back up. And so, signs of improvement. We've got definite signs of ADX, but it's being fooled a little bit by this big spike.
Right. Yeah, I've definitely got caught up in that in the GameStop. Let's also take a look at a few tech stories that a lot of people do care about. Shopify as well as Amazon. What are those looking like these days?
So, as we go and look at the QQQ, to start, this one is actually very similar to that in that, you've made a pretty big run. Now, this has been very volatile along the way, but it's been a great stock. It's just this last run. So you look at new highs, new high here, break, and you break out, and then you go sideways and you pull back and you break out there. Then you went sideways and you broke out again. And then you went sideways and then you broke out again. But you notice this last one only lasted a week and then it reversed pretty hard. So it's sort of like, I don't know if anyone follows William O'Neill, but he would say it's kind of like a late stage break and failure sort of. It's just, you need a longer consolidation phase after you keep running up. I mean, these are the low risk areas where you go sideways for a long time and then go make a move up. And then you kind of go sideways for a decent period and then you start moving higher. But once you keep lifting farther and farther away from the initial breakout, you need a longer consolidation phase. And I think that's what's going on here. Amazon is a little bit different. Sideways pattern breaks out. Another sideways pattern is developing here. I think there's pretty good support, say 2,600 to 2,800. And there's probably a little bit more downside risk in this in the near term. But personally, I think you're working off this overbought condition in the MACD, and it's getting closer and closer to the 0 line. And that's probably where we get our next, prime opportunity in this. So that'd be what I'd be on the lookout for.
So buying opportunity maybe around that $2,600 level?
I mean, if it were to drop down to 2,600, and again, you like to kind of buy weakness and you want to do that, that'd probably be the spot I would do it. Otherwise, I would just let this consolidate some more. And the moving averages are rolling over a little bit. Look for signs of a shift in the trend on maybe like a daily chart or something like that. But right now, 2,800 is a key level to watch, and then 2,600. Those are kind of the two that I think are important if you're buying the dip.
Okay. We've also got somebody who's quite interested in some of the semi stocks. Let's kind of rip through TSM, Qualcomm, and AMD. And I'm personally curious on NVIDIA.
Yeah. So again, big run, nice move. You had a strong breakout run and then a consolidation. Then you made another big run. And now we've pulled back pretty hard. We're back to the 18-week moving average, but we did it in such a violent way. My guess is we're going to pull one of these, some kind of a up and down little kind of consolidation pattern of some sort. That takes a little bit of time. I think you've built up resistance up here. But they're probably going to be support at some point. Maybe it's at 110. I'm not sure exactly. We might have already hit it, but I would probably hold what if I had it, but I wouldn't be looking to buy it right this second. I think it's a little too violent in the way the selling is taking place. Now, if you bought this down at 40 or 50 and you've made a huge amount of money and you haven't taken profits, then I would definitely say that makes sense. I think that's the prudent thing to do, and that goes for all these semis, really. But
to not take profit or to
off that much.
To not take profit or to take profit.
To take some profits.
Okay.
I'm a big believer in scaling out of positions. I don't think you have to be an all or nothing guy. I don't think you have to make 100% sell at 140 and be right. I think you can sell along the way. And when the position becomes a bigger part of your portfolio, you trim it back and take advantage of pullbacks to maybe add to it again. So that's kind of how I would look at it. And then let's look at Qualcomm. This is a little bit more violent in the way it's coming in, but it has reached the 40-week moving average. This is probably a pretty good spot to, again, expect some kind of a bounce. I really like the longer term picture on this. I think this was a big breakout, and this is really the first pullback. I don't have a problem if you want to do a little nibbling, but again, you got to be careful on these violent. This is like buying a falling knife, right? We want it to kind of hit bottom first and stabilize a little bit before diving in. But if you've been wanting to buy this and you want to do a small piece to start a position by nibbling or getting a toe in the water, I don't have a problem because we have made a pretty good drop, but I think it's going to end up taking a little bit more time to correct.
Okay. And then Joe, a lot of people just on a fundamental front have loved NVIDIA, but those people have now also moved a little bit more towards AMD. So what's going on in both of those?
Yeah, so NVIDIA is a classic failed new high. The pattern I was just talking about where you went to a new high and then for about a week and then immediately failed. And so that's a pretty big negative after a big run. I think this is going to take some time. I think you're going to spend time consolidating. We lost a lot of momentum. When we hit a new high here, the MACD didn't come anywhere near confirming, and neither did ADX. So I think we're just going to go through a period of, again, consolidation. I'm not necessarily calling for this to go back down to 300, but it's just made such a big move that I think, it's the type of thing where it's just going to take some time. Let's go back to AMD. So this one, again, look at the momentum divergence. So you went to a new high in price here, and MACD did not confirm. And so that was sort of the sign I was mentioning to clients that maybe we'd go through some kind of a pullback. It doesn't necessarily mean you're going to reverse the trend, but the pullback is back to this prior low area, which we've already reached.
Right.
So now the question is, do you hold here? And, it might is my answer. I'm not a big believer in making that kind of a call when you have momentum divergence in place. And really, again, we look at the daily chart. I've got negative momentum here. This is really strong selling.
Yeah.
I'm not going to jump in this with negative selling on this time frame. I'm going to wait for this to stabilize on a short-term time frame. And if it does, then I'd be willing to buy it, because for all I know, this is going to 70. Might be going to 60. This is the real major support level at 60. I'm not convinced yet that this is turning. Short term, yes. And again, if you don't want to wait for more confirmation and you like to buy weakness, then nibble a little bit. But I wouldn't just go diving in.
Okay. Joe, let's get to your ideas. What have you found in your screening of thousands of stocks?
Okay, let me go. I'm just going to, I've been jumping back and forth, but I'm just going to leave it on a weekly.
Yeah.
Let's look at Cigna. And actually Cigna's having a really good day today. It might actually finish up the week. I mean, it has tried a number of times to try and break out of this big base. I'd really love to see this break out and get through there. It's not even there yet. 230 is really kind of the breakout area, but we have a low ADX pattern on the weekly. There's a low ADX pattern on the monthly, and there's a low ADX pattern on the daily. That means there's no trend environment right now. And when that's the case, we want to look for breakouts. And if we can break out above this big area, then you should expect probably this, the start of a trend. Let's go on to the next one. So this is Abm Industries. So, again, you had this long sideways where you were ratcheting back and forth, but now you're getting through this 42 area and potentially breaking out. Starting to see signs of improvement on the ADX. Just overall pattern I really like the looks of.
Okay.
Here's a financial. State Street is trying to turn around. It had the long decline and has been kind of going sideways, and it's trying to start to participate with the rest. I want to see this get above 80. If it does that, I would start to feel like it probably plays a little bit better with the rest of the financials.
Mm-hmm. And when we talk about these stocks having some, the potential for upside, Joe, well, what kind of upside are you expecting to get? I guess is the question.
Yeah, I'm not a trader really. I mean, I can trade and I can identify trades and find stocks that could move in the next week or two, but I'm really like a stock like Cigna. I'm looking for something that I think can move over the next year or two. And I wouldn't even put a target on it if this broke out, because I would think it would be the start of a pretty meaningful trend. In a stock like State Street, because of the way this is played out, if this turns the corner and gets through 80, I would be expecting this to work its way back up to the old high. So I'm looking at these multiple timeframes because I'm trying to find a match between a monthly chart and a weekly chart. And when you get that, you have the potential for a lot more upside.
Okay, let's take a look at SWK. That's another one. Stanley.
Yeah, so here's the breakout pattern, and now it just came down to where it broke out from. So former resistance becomes support, and you held it through this whole period, and now we're starting to kind of lift off this area. I just like the overall look to it. I think it's pretty attractive.
And am I right in seeing Weight Watchers?
Yeah, kind of funny, but
wow.
You look at the chart and see what's taking place. Big, huge decline, big up move, come back down. We're testing this low. I mean, we're starting to see signs of real buying. And one thing I wanted to show is look at the volume on the daily chart. I mean, this is the best volume this has seen in a long, long time. So it's kind of interesting that this is showing up here. Maybe everyone was sitting at home.
This is exactly it.
Eating and not moving, and now they have to see people again. So they're getting ready to be prepared for that. I don't know.
I think that's exactly it. I like the fundamental side of it too. Okay, am I looking at FireEye?
Yeah. So this is a stock with a big long sideways pattern with huge. Look at the volume breakout, and now it's pulling back to kind of where it should find support. Now on this stock, I would draw in a downtrend line, and I wouldn't be a hero. There's just no reason to try and buy this down here. I'd wait for 20 or 21, because if this works, you're unwinding, 4 or 5 years of going sideways. This has huge, huge upside if this gets going to the upside.
Wow.
So I wouldn't feel the need to be the first guy here.
Okay. Wait for it to really show some confirmation strength, which would be around the $21 level.
Right now. And if it goes sideways for a couple of weeks, it might be more like 20 and a half, something like that.
Got it. Okay. CMC?
Yeah. Oh, wait a minute.
Oh, wait, no, that's a different one.
No, this is the wrong one.
Okay.
Commercial metals.
Okay.
This looks a little better.
Yeah.
Right? I mean, we did nothing for a very long time, and now we're breaking out of this big base. Look at what's happening to the ADX, crossing above 25 for the first time based on the buyers. MACD's turning up. It's just, I think the potential is here. Now, I'm not necessarily saying it's a buy right this second. We probably want to look to buy some minor pullback here, but really good price action breaking out of a pretty big base.
Okay. MEI, got 3 more to go, everybody.
Yeah. So pretty big turnaround developing, and this is a semiconductor guy, and they're just smaller cap semi. But if I go and look at the pattern that I've been talking about, we're breaking the downtrend, we're kind of testing that line, and now we're turning back up. And so just overall good action there.
Mm-hmm. And then everybody cares about Apple and Facebook.
Yeah. So, I mean, this is pretty much the QQQ trade. We had a price high that wasn't confirmed by the momentum on the MACD or the ADX really. And I think the target I'm looking for is around 105 to 110 for a pullback. That to me would make the most sense. Now it's possible it's going to try and hold this interim support, but just based on the overall pattern, I'm sort of calling for a little bit more of a drop down into, like I say, 105, 110. Now, Microsoft's a little bit different. You do have a little bit of momentum divergence, but this is a much stronger trend in my view overall. It doesn't have any kind of signs of real distribution yet. And I think the 220 area is probably really important. As long as you stay north of 220, I would have a pretty decent bias, long bias on this. Not necessarily a stock that I would buy if I'm a long-term investor, and I want to show you why. This is what the monthly chart looks like, right? I mean, I'm recommending this down in here, after this period here. I recommended it here. In fact, this is, I did a book, Invest Like a Pro, and this is the last chart in that book was talking about this reversal pattern. And so, that is, I like pullbacks to the 18 month, but when you get away from the 18 month, you got to be questionable. And now you got to look at this and say, this has been going up for a very, very long time. So the risk is elevated from a long-term standpoint.
Mm-hmm. And then lastly, Facebook. Yeah.
Facebook, I kind of like, it didn't get crazy like these others. And it had a really strong breakout. And I think the consolidation looks pretty good. I think there's pretty good support at like 230, 240, 250 if it does dip down. I might consider being a little bit of a buyer on a dip on this just because I think there's a lot of underlying support in place.
Okay. Joe, why don't we get rid of the charts and just kind of, thank you, wrap it up in the sense that for everybody to know, like what you and I just did for the past hour and a bit is what we always did and you still do for institutional clients in terms of, the reports that you have going through the markets, going through stocks that they might care about, i.e. your viewers' questions, and then going through stocks you like. So it's incredibly comprehensive, but, people should know that's what the, big money managers, who run billions and billions and billions of dollars do.
Right. And what we're looking for is a match. We want to find where the fundamentals and the technicals kind of overlay and are telling you the same thing. And that's where I think big money can be made. Where if you're on one end of the spectrum on fundamentals and the technicals are say really, really bearish, well, maybe you don't do as big a position. You play it lighter until the technicals start to confirm, or the other way around. So that's kind of how I would do it if I'm in your position. A lot of it has to do with position sizing.
Right. In other words, just know how much you want to go in. Leg in is kind of, I think, how you approach it.
Right.
Okay. And Joe, also, so everybody should know, though, that they can go to your website, rabilstockresearch.com. They can sign up for your newsletter, which is new. You didn't used to do this for retail individual investors, but you can do it now. Right.
And what I've done is I've actually I have a coupon that's called Catherine.
Thank you.
For anyone who's watching that's on your YouTube channel or whatever, if they go on to rabilstockresearch.com/services and they sign up for the individual monthly service, for the first 3 months, it's $50 a month instead of the regular $100. So just a little bit of a discount to see, 50% discount to see if the information there is worthwhile. So
great. And what are they going to get with it? What are you really providing them? Because it's going to be different than, doing what we just did for institutional investors.
I do a once a week market analysis of the S&P, and I will look at the other markets if I think they're important. I'll mention them in the weekly report. And then I usually do like positive and negative highlights. I look at the sector action and what's rotating up and what's rotating down. And then on Wednesday, I also do a sector, what I call a bottom-up sector report. And that is where I go through all the stocks in the database pretty much every month. And I go and basically give you what I think are the best looking attractive patterns, and I go sector by sector. So, when the market's looking really good and there's a lot of attractive, there's a lot of ideas in there. And when things get a little uglier, there'll be fewer ideas, but there will always be ideas. So,
okay. Well, that's awesome. That's I think what everybody's looking for. And just lastly, if people want to actually really learn about technical analysis, your YouTube channel is Invest Like a Pro, and you have a book, Invest Like a Pro.
Right. So if you just type in Invest Like a Pro into YouTube, I'll pop up. It's an educational channel, but it can help for you to understand how to incorporate, especially if if you like to look at the fundamentals and you have a stock that you're interested in. It can really help with your timing, so that you're not maybe buying something at 50 and then immediately watching it drop to 40, which you might be right in the long run, but it's sometimes that's kind of a painful short-term situation. So I try and help guys understand how to avoid that, guys and gals.
Yeah. Joe, that was great. I'm so glad we are able to do this. It's such an incredible format, what we're able to do today versus, when we met well over 10, 12 years ago, just to be able to provide this for viewers. I mean, it is the democratization of investing.
Yeah. It's been great. Thanks for having me on.
Okay. Thanks, Joe. We'll do it again.